Lucid is set to release its fourth quarter earnings report on February 22, and investors are eagerly waiting for the results. The report is expected to give an insight into the company's financial health and progress towards its goals. Lucid has been gaining traction in the market with the rising demand for electric vehicles. The company has also been in the news lately due to rumors of a potential buyout by Saudi Arabia's Public Investment Fund. The PIF has been one of the major investors in Lucid, and there have been reports that it may be considering a full buyout of the company. And so, investors are keeping a close eye on the earnings report, as it could clarify the company's valuation and the likelihood of a buyout. Analysts are also keen to see how Lucid plans to tackle the supply chain issues plaguing the EV industry and whether it has any major partnerships or collaborations in the pipeline. So today, we'll examine what analysts think of Lucid, and we'll talk about where its stock is expected to go. Lucid Group Incorporated specializes in high-end electric vehicles and currently trades at around $10.63. Many investors predict the company's stock will rise to $14 or even higher in the next couple of weeks. And this is likely due to the company's recent solid performance, which has resulted in a 25.15% surge in share prices over the last month. Additionally, there have been rumors of a potential buyout by the Saudi Arabian Wealth Fund, which we will discuss in further detail later in this video. Investors eagerly anticipate Lucid Group's upcoming earnings report on February 22, 2023. While the report is expected to show a loss of 39 cents per share, but the highlight will be the projected quarterly revenue of $289.8 million. And this represents an astounding 998.14% increase from the previous year. The news is positive, and experts predict that it may cause the share price to increase to $14 or more. Although the earnings per share are not great and show a loss of 39 cents per share, the decline is relatively small at only 5.41%. This is not a good sign, but it's not terrible either. On the other hand, their revenues have increased by almost 1,000%, and it all comes down to what investors expect from the upcoming earnings report. It's incredible for a business to increase its earnings by nearly 1,000%, but it has both good and bad aspects. So, after examining why investors are so enthusiastic about the stock, it's important to also consider some pessimistic factors. According to a Wall Street analyst, Lucid Group decided to step back from the meme mania. This decision was prompted by a surge in share prices, which reached around $17.81 per share, and rumors about a buyout, which have yet to be confirmed, may have caused this spike. Specifically, there is talk of the Saudi Arabian Public Investment Fund potentially acquiring Lucid, which I mentioned earlier. Until now, all we had were speculations, but investors were thrilled with the idea of a buyout, causing the share price to surge to almost $18 per share. Nevertheless, the rumors of a buyout may not be a thing of the past, as Saudi Arabia's public fund has recently invested more in Lucid Group, potentially making the buyout more viable. The analyst has pointed out some negative aspects that may cause a decline in the Lucid stock. Selling your shares to reduce losses is recommended, but the decision depends on various factors. But it might be better to wait until the earnings report is out, as it could increase share value, especially if they meet or exceed the projected estimates from Wall Street. Despite this, the analyst advises selling stocks immediately. He argues that even though Lucid Motors' value has remained steady at $10, many investors see this as the lowest possible price, making it unlikely for the stock to dip below $10 per share. This expert thinks the company's stock may plummet to $6.09 per share after the earnings report. More realistically, the stock may only drop to $7 to $8, even if the report is disappointing. Furthermore, he said Lucid has been facing long-standing problems, such as delays in production, high cash usage, and increased competition. And although the company is not in danger of failing since they have wealthy investors, it may take until after 2025 to see significant investment returns. In addition, although Lucid will need to address these issues in the near future, it doesn't necessarily make them a subpar company. The analyst noted that Lucid is actually following the lead of other successful car manufacturers like Tesla and Ford by reducing the prices of their cars. Tesla and Ford have already implemented this strategy, and now Lucid is following suit by providing a rebate of $7,500 for the Air Touring and Air Grand Touring models. However, this amount is not particularly significant for buyers purchasing vehicles worth over six figures. He claims that we cannot be sure if Tesla and Ford's decision to lower prices has been successful. However, other experts disagree with this claim. The price reduction has caused a massive surge in demand for both companies, leading to increased sales and profits. They think it will be a positive move if Lucid can also benefit from this strategy by boosting sales or pre-orders. The analyst recommends selling the company's stock if they don't perform well in its upcoming earnings report or miss their projected vehicle deliveries for 2023. This is pretty obvious since poor performance in these areas typically leads to a drop in share price. Now, investors should remember that a company's share price can increase significantly if it exceeds revenue and earnings expectations or delivers more products than anticipated. Now, before we continue, I'd like to thank you for getting this far. And if you want to know more Lucid and the Saudi PIF, then make sure to watch this next part. So, let's talk about a more exciting news. Saudi Arabia's sovereign wealth fund recently upped its investment in Lucid stock. This has led to rumors about a potential buyout, but the Wall Street analysts think it's better for all parties involved if the company remains independent. Plus, it doesn't make sense for them to increase their stake if their ultimate plan was to buy the company outright. They have plenty of money to do so already. The Wealth Fund of Saudi Arabia, also called the Public Investment Fund, has raised its stake in Lucid Group. PIF now owns 1.11 billion shares, which is an increase of 9.2% from the last quarter, and this information comes from their 13F filing. The figures presented are current and precise. Furthermore, the investment fund acquired a clearer set of stocks and slightly increased its ownership in Activision Blizzard under the ticker symbol ATVI by only 0.1%. On the other hand, their unexpected move was reducing their shares in the internet-based fashion seller Farfetched with ticker symbol FTCH by a whopping 36.5%. It's encouraging that the company is increasing its stake in Lucid Group despite a projected 6% decrease in earnings per share. And it's clear that everyone is looking forward to their upcoming earnings report on February 22, as it may boost their stock value. So, are you waiting for the release of Lucid's fourth quarter earnings report too? What do you think will happen? Let me know in the comments section below. And while you're at it, make sure to smash the like and subscribe button as well. Additionally, if you want to know more about Lucid stock, then make sure to click and watch this video right here and enjoy. And that's the end of this video, guys. See you next time.